Stay tuned to find out what ARK Invest said about NIO. Shocking, this is the catalyst we've all been waiting for. Hey folks, welcome back to the channel. Before we get into the video, don't forget to drop a like on this video and subscribe to the channel if you haven't already. Make sure that the post notifications are turned on so that you never miss a video from us. Without further ado, let's dive in. Cathie Wood, the CEO of ARK Invest and a longtime Tesla bull, may be warming to the Chinese electric vehicle company NIO, according to the fund manager's hints. In a March interview with Business Insider, Wood expressed her admiration for China's concentration on electric vehicles and stated that her team is investigating Chinese EV players, including NIO. As an ecosystem develops around China, the Chinese government may be supporting a local winner in the EV market, according to Wood. Wood, who also believes that a homegrown company is more likely to succeed. Rumors reignite due to the fund buying at AFT Alerts, a Twitter account that analyzes institutional buying and selling, said on April 23rd that 1,231,552 shares of NIO were purchased for $48.733 million at $39.57 per share. This had people's mouths wagging. In response, ecstatic Twitter users speculated that the purchase was made by ARK Invest. There is no proof that NIO shares were purchased by Woods' ARK Invest. The stock's gain could be attributed to positive analyst action. Subin Park, a CLSA analyst, started coverage of NIO shares with a buy rating and a $50 price target. The stock is also benefiting from broader market strength that has spread to the electric vehicle sector. The stock of NIO has had an up and down year. Investor sentiment has been swayed by the continued chip supply constraint, as well as regulatory challenges in China, putting significant pressure on the price. Since peaking at more than $66 earlier this year, NIO has dropped 40%. However, Goldman Sachs' upgraded forecast on the company, combined with NIO's better-than-expected third-quarter delivery numbers, may indicate that it is finally due for a turnaround. In recent weeks, NIO's stock has been on a slow but steady upward trend. It's up 7% since NIO reported third-quarter delivery figures earlier this month and approximately 5% since Goldman Sachs upgraded the company from hold to buy with a $56 price tag a few days ago. The moderate upward trend is projected to continue with new catalysts on the horizon in the short term. The imminent release of NIO's third-quarter earnings is expected to provide light on the company's progress with expansion goals, including more information on the launch timeframe for its new brand and product roadmap, as well as an increased investor confidence in the company's financial prospects. At the very least, NIO's annual keynote event at the end of the year, NIO Day, which typically walks through new product and technology upgrades and launches, will provide more detail on the two new vehicles in separate line launching in 2022, if not making the event their official launch, as the EV maker did for the ET7 at NIO Day in 2020. The strong demand for electric vehicles in China continues to support NIO's long-term growth prospects. Since its launch in 2018, NIO has developed to become one of the most well-known electric vehicle brands in China's fast-growing market. Based on these factors, analysts continue to be bullish on NIO and retain their 12-month price objective of $59.74, which is similar to Goldman Sachs' recent recommendation. Given NIO's path to increase market share through its continued incursion into Europe and broad model pipeline, as well as an overall surge in global EV adoption, the company is well positioned for a return of a robust rally in both the near and long term. As a result, greater valuations are expected in the future, making the stock's current price level a good starting point for investors. Goldman Sachs raised its rating on NIO from hold to buy with a $56 price target. Goldman Sachs' outlook for NIO's upside potential aligns with the Bank of America's $62 buy rating. NIO jumped about 7% intraday when the news was released. The planned start of customer deliveries for the ET7 premium luxury sedan early next year, according to Goldman Sachs research notes, could establish the business as a leader in the premium EV market and underpin renewed upsides for the stock. The ET7 is a full-size premium smart electric vehicle that competes directly with Tesla's Model S, Mercedes-Benz's S-Class, and BMW's 7 Series. The ET7 is NIO's most costly vehicle model outside the EP9 supercar, with a starting price of RMB 448,000 or RMB 378,000 with a membership to Base and NIO's proprietary battery solution subscription service. The ET7 is powered by NIO Technology Platform 2.0, a new higher-margin technology platform that includes NIO Autonomous Driving, the EV maker's own advanced driver assistance system. NIO Aquila Super Sensing and NIO Atom Super Processing combine 33 high-performance sensors and high-resolution perception gear, such as 118-megapixel cameras and an ultra-long-range LiDAR, with sophisticated computing capability to offer a safe and smooth self-driving experience. The ET7 also boasts one of the industry's best range capabilities. The car can drive more than 310 miles and 434 miles on a single charge when equipped with NIO's legacy 70 kilowatt and 100 kilowatt batteries. The ET7, however, is expected to deliver a range capability of up to 620 miles on a single charge with a new 150 kilowatt solid-state battery pack that will be added to NIO's current lineup of swappable batteries, possibly by Q4 2022, surpassing current record holder Lucid Motors' range capability of 520 miles on a single charge. The ET7 will be one of the first premium smart electric sedans to address two of the biggest roadblocks to global EV adoption: range anxiety and long charge times, thanks to its proprietary battery swapping technology, which can swap out a drained battery for a fully charged one in under 3 minutes. According to Goldman Sachs, the Chinese market has a monthly demand for more than 10,000 premium vehicles. With the increased demand for electric vehicles in China, the ET7 and its strong technological capabilities position NIO well to take advantage of future development prospects and effectively compete for market share in the growing segment. With the stronger prognosis in the books for NIO's rising leadership in the premium EV market, the EV maker is expected to see greater valuation possibilities in the future. After disclosing limited but surprising information on the planned debut of the two new NIO vehicles and a fresh new sister brand in 2022, the second quarter earnings release left investors begging for more information. In order to better penetrate the mass market, the third quarter earnings report will most likely include more data to alleviate the anticipation. Given persistent supply chain difficulties, the EV maker is also expected to provide an update on its production outlook for the rest of the year, as well as its expansion progress in Norway and the rest of Europe and the delivery timeframe for its ET7 sedans. NIO's year-end projection will be crucial in determining if the firm is progressing as predicted by investors and the broader market. Given NIO's better-than-expected third-quarter delivery numbers, the next earnings call is anticipated to add to the positive results and support the stock's rally. NIO Day 2021, which will take place at the end of the year, is another widely awaited event. The specific date for the keynote event has not yet been announced. However, it is projected to take place between December 1st and January 15th, 2022, based on the previous year's trends. Many believe the EV company will unveil the two new vehicles announced in Q2 at the upcoming keynote event in Suzhou, similar to how it did with the ET7 at NIO Day 2020 in Chengdu. During NIO Day 2021, it is rumored that NIO will unveil a second sedan dubbed the ET5. The next model is projected to be a mid-size sedan based on the NT 2.0 platform with styling that is comparable to that of the ET7. The stock is projected to benefit from the upcoming introduction of new automobiles, which could take place on NIO Day 2021. The debut of the ET7 during NIO Day 2020 last year propelled NIO's stock price to an all-time high of over $66, up about 20% from the previous trading day's low. The analysis outlook on the company remains bullish, with a 12-month price objective of $59.74, implying a potential upside of more than 58% based on the most recent traded share price of $37.71 on October 15th. While the stock has been subjected to prolonged volatility in recent months as a result of market fears over persistent supply chain problems and regulatory challenges in China, it may now be due for a turnaround. Recent events and the forthcoming catalysts all point to NIO's valuation improving in the near future. This indicates that the stock is in a short-term and long-term uptrend, making the current price level a good time to buy. With this, we've come to an end. We hope this session was informative. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and press the bell icon to get notified about our new videos. Until then, fellas.